traders. The man who this morning, in his morning report, coined the name Hurricane Jerome. Trader Sarge Guilfoyle. I want to get to Keith Fitz-Gerald now. It's like I need a cover. I need a shield here because I know you are going to rain a can of you know what, right on the Fed. But hold back for a minute if you can, Keith. We have the Dow now falling below 34,000. The Russell is just getting crushed here, down 2.5%. Transport, everything's down 2%. We just showed the Dow leaders. There aren't any leaders. They're just less worse numbers here. Why aren't you, or maybe you are, picking up some bargains right now?
Well, actually, to the Sarge's point, I am picking up some bargains. So, for example, I've had it with Disney, like a lot of people. I said, I'm done with that, and I went after a company like NVIDIA. Because when stuff like this happens, one of the single most important and misunderstood premises of the market is that it's looking forward. So we have a saying in our office called, when in doubt, zoom out. NVIDIA is in an industry that is growing by 6 to 8% a year, is going to be $1 trillion industry all by itself by 2030. People, that's the kind of stock you want to own no matter what happens today or tomorrow. Yeah. And look at it this way too, Liz, to the point of everything is going to hell in a handbasket right now. People are changing the way they buy. They're changing the way they put food on the table, the medicine, everything else. I haven't heard of one person yet that is giving up their iPhone or changing their computer or ditching the technology that's going to make all of this possible. So you've got to invest if you believe that there's a future, because otherwise the world's a pretty bleak place. Yeah, and by the way, I agree. I mean, NVIDIA is not going away, down 33% year to date. Can I just bring up Disney? There is a headline. Florida Governor DeSantis has just now signed that bill into law, stripping Disney of its special governing status. Disney, of course, had gotten into it with the state of Florida on the so-called Don't Say Gay bill, the parental rights bill. And so that did not work well. It became like fire and ice with those two. And we do have Disney down about 2.33%. Again, though, Sarge, I mean, when you see that it, too, is down about 33% year over year, tell me what you're interested in at this moment. Or do you wait till what you just said, and that is, this is a panic phase, but it's not capitulation. You wait for capitulation. And what does that look like?
No, I'll tell you flat out, I've been selling some AMD. I've been selling some NVIDIA. These are two of my favorite stocks. I've been selling Lam Research, Disney, Kratos, Microsoft, a lot of stocks I love. I'm not out of these names, but I've been lessening my exposure. What I've been grabbing, Schlumberger. I love their report this morning. I like the CEO's aggressiveness. Southern, Pepsi-Cola, Wells Fargo, Walmart, Colgate. These are the kind of stocks I've been buying, stocks that are less volatile. So I won't get my socks knocked off when I look at my screen in the morning, and I can figure out my game plan for the day. Because really, if you're a guy like me who's in front of a screen all day, you want to be a trader more than an investor right now because it's safer.
Okay, but and Keith, you have made this point in the past. Abject bearishness is a sign of bullishness, isn't it? And so are people needing to flip the narrative here and turn it over and say, wait a minute?
Thank you for bringing that up and for remembering it. You're very kind. Yes, that is absolutely the case. We tend to do as investors exactly the right thing at the wrong time. 85% of all buy-sell statistics are absolutely wrong. People buy when they should be selling, sell when they should be buying. You don't go to a store when they're having a 50% more sale. You go to your favorite store when they're having a 50% less sale. A company like NVIDIA is 35% off its highs, but in a multi-trillion-dollar growing market. Apple is off its highs, but in a market that is not going anywhere, and it can influence consumer behavior. To the Sarge's point, stuff is out there that's very stable. You can buy those companies and know that they're going to be there years from now. You can't say the same thing about a company like Peloton. That's just a very different kind of player. So you got to go with best, not rest, and abject bearishness is a bullish indicator over time.
Okay, I know that, but all this red on the screen gets a little disconcerting. Guys, thank you. I would love it if you can stick around at least close to your cameras because things are moving fast and furiously here. We've got 49 minutes left to trade. This Fox Business Alert, we already 9. Keith, at the start of the show, we were down, but not by this much. So anybody who bought is now looking, oh, wait, I could have gotten it more cheaply. How is the market psychology at this moment?
Well, you've hit the nail on the head here, Liz. It is all about psychology. If there's going to be a bid, it's going to come now because the computers are getting to the point where we're starting to see the buy programs flip. We're already seeing that in the options trade, just as I'm sitting here on the screen looking at mine.
Tell me, what are you seeing in the options trade, please?
Well, what we're seeing is something called convexity. We're seeing it change. The skew is changing. What that tells me is buyers are beginning to circle. So, again, we've got some big tech earnings coming next week. Could this have been a massive head fake? I doubt it. I think this is about the Fed jawboning 75 basis points, and it resembles the bond massacre of 1994, which I traded through as a young man. People don't remember their history. We've been there before. It's been bad, but importantly, we saw that before a dramatic market rise. Valuations are starting to look like 2009 to me. And we know what happened next.
Greg, I'm stealing a term from Keith. Right now, the Dow is down 964. We haven't seen a 1,000-point drop for the Dow since, I believe, June of 2020. So who knows if we'll get there. It didn't help to hear Fed members talking on other networks. That people understand and they know that the Fed's goal is to bring down inflation. So why is the market looking at this so negatively? I mean, demand destruction is needed to bring down inflation, is it not?
There's no question that's the case. But what's happening today, Liz, is something in the world of high finance that most people don't think about. A lot of these big money traders are leveraged up to their eyeballs. So this isn't about Apple failing or about the economy going to hell in a handbasket. What this is about is these big traders who are over leveraged, faced with higher costs of carrying. It's like borrowing a house and having the interest rate go up. Suddenly you owe more money. So they're simply getting off the gas. Now, it doesn't help that the Fed has been completely irresponsible. How these people have jobs right now, I have no idea. Transitory is the worst call in probably modern economic history. In the private industry, you either get it right or you get fired. Yet they're going to be elected for new terms, and people are placing more confidence in what they're happening. So it doesn't make sense to me. This is a time when you want to take the psychology, put it over here. You want to focus on great products, great companies, and importantly, great visionary CEOs, because they have to get through this if they want to have a job tomorrow.
Yes.
And as investors, that's
Yes.
something we need to pay attention to.
Yes, I am praying to the church of Keith Fitz-Gerald on that. The worst call. And yes, CEOs in the private sector have to have cash flow. They have to figure this out.
Exactly.
Folks, we are 7 points away from the Dow losing about 1,000 points right now. And so actually, well, let's call it, it looks like we're about to go there, down 999 points at the moment. And there we go. The Dow losing 1,009 points. It is a rout. I want to thank Greg and Keith. We appreciate it very much. I do want to say I'm looking at stocks here.
Hi, it's Keith here. Thanks for checking out today's highlight clip. What'd you think? Did I make sense? Is there something you'd like to add? Make sure you leave a comment down below. And of course, click subscribe to keep up right here on YouTube, or sign up for the email newsletter at the link below. You can also find me on Twitter and Instagram for my real-time thoughts on markets, analysis, and a whole lot more.